there's no fear of a correction right now, which is generally a good time to start hedging your portfolio a bit because that's generally when it happens. Let's talk about what you need to know before the bell this morning. We're going to take a quick trip around some different markets here real quick. Yesterday, the market did sell off a little bit. Not surprising. New announcements on tariffs. We talked about that yesterday. Started to work off some of that really overbought condition, but we got a long ways to go on that. So again, a bit more sloppiness here wouldn't be surprising over the next week or so. We just need to work off some of this kind of overbought condition. Got a fairly big deviation between the current level of the market and even the 20-day moving average. There's a fairly decent deviation there, and just particularly above the 50 and the 200-day moving average, that gap has gotten pretty big. So again, just kind of that gravitational pull of moving averages is likely going to pull stock prices down here at some point. Doesn't necessarily mean today, but again, that's, we've got a lot of stuff to work through now with tariffs kind of trying to come back and the earnings, got a lot of other stuff going on. So there is a risk. Be sure and take some profits here, rebalance your portfolio a bit. Would not be a bad idea at this point. 10-year Treasury yields have been rising here over the last couple of days. Lots of headlines trying to assess, like, why are they going back up? Is it the big, beautiful bill? Is it this, that, whatever? No, we have Treasury auctions this week. So as is always the case going into a Treasury auction, particularly for 10s and 30s, what traders do is they basically short the bond market going in. They want to drive yields up, drive bond prices down going into the auction so they can buy those bonds cheaper. So again, we got pretty decently oversold here on yields. And so again, this kind of bounce over the last 4 days going into the auction is not surprising at all. But again, we still have a pretty good trend lower here in yields at this point, particularly as the economy slows down. Would expect that to be the case. Once we get through auctions at the end of this week, likely going to start to see bond buying come back in as well. So again, just don't read a whole lot into short-term movements in yields. They typically don't mean anything, particularly when you're going into an auction. Outside of that, crude oil, of course, has been kind of one of the big stories as of late. We had this huge spike in oil over concerns about Iran, and of course the bombing of Iran that immediately after that completely collapsed, because the threat of World War III quickly dissipated. But oil prices have been kind of creeping up here just a little bit. We're trading right now around $67, $68 a barrel. It has been creeping up very slightly. Where we got pretty oversold here on a short-term basis, so this reflexive rally in oil is not surprising. But we're coming up to challenge the 200-day moving average. So again, if oil can break above that, we might see some higher oil prices here near term. We are moving into hurricane season as well. So again, there's some threats to oil supplies if we have a big hurricane in the Gulf that shuts down offshore drilling platforms, or if something hits Louisiana as an example, where we have a lot of drilling production, that could provide a short-term boost to oil prices. But again, we're not on a buy signal yet, but getting decently close. So I'm just saying there is some upside in oil prices here, so energy stocks should perform a little bit better in this environment. The Skew Index is something that's a little bit harder to pay attention to, but the one thing about it, importantly, is that it is telling us right now that, again, not surprisingly, we're seeing a lot of volatility kind of evaporate out of the markets right now as speculation has really returned large ways. Skew has dropped sharply. That's kind of relating to a lot of options activity, but we're seeing that across the VIX as well. So again, kind of no matter how you look at this, a lot of that concern about markets has evaporated here, and that speculative activity has returned very quickly to markets. Again, there's no fear of a correction right now, which is generally a good time to start hedging your portfolio a bit because that's generally when it happens. But that's what you need to know before the bell this morning.